Okay, let's talk about something that's a little bit uncomfortable. Right now, as we speak, a huge number of people are silently, quietly losing money. And it's not from some big dramatic event, but from these tiny, predictable mistakes that creep in. And the worst part is, most of us don't even realize it's happening. These aren't obvious blunders. They're more like quiet leaks in your financial boat that just set you back for the entire year. So you've got to ask yourself, am I one of them? Now, here's where it gets really interesting: the timing. This is not random at all. This financial drain happens like clockwork, right at the end of the first quarter, every single year. And once you see the pattern, you can actually get ahead of it. So that's what we're going to do. We're going to walk through the 6 most common, most costly money traps that pop up at the end of March. We've got the fresh start fallacy, the premature reward, the Q1 panic reaction, subscription creep, tax time procrastination, and the big one that ties it all together, the blind quarter. So let's dive right into the first trap. And honestly, this might be the most expensive one on the whole list. Not because of the money it costs you today, but what it costs you over decades. It's that habit of pushing your financial goals off just a little bit longer. You know the voice in your head. It says, Q1's pretty much over. I kind of fell off the wagon with my goals, but hey, April 1st is a fresh start. And it sounds so reasonable, right? But what you're really doing is just giving yourself permission to delay. And that delay, it has a very real price tag. And boom, here's the cost. It's staggering. If you put off investing just $300 by one single month, and you make that same fresh start mistake every year, over 20 years, you're potentially leaving $20,000 on the table. All thanks to compound growth you missed out on, just from waiting. The takeaway here is so clear. Don't wait for April. Go automate that investment today. Okay, let's move on to trap number 2. This one is, well, it's so relatable, and that's exactly what makes it so sneaky. By the end of March, let's be honest, we're all a bit tired. The first quarter can feel like a marathon, and you think, you know what? I earned a reward for getting through it. But here's the trap in action. The common habit, on the left, is to spend the money on that reward before you've even looked at your numbers. You just kind of assume things are on track, and you spend. And bam, you're already starting Q2 behind. The fix is so simple, but it's a game changer. Just flip the script. Adopt the wealth habit. Review your Q1 numbers first, see if you actually hit your goals, and then go celebrate. All right, trap number 3 is all about letting your emotions drive the bus. The end of March, that's when the financial news goes into total overdrive with all the Q1 performance reports and these super dramatic headlines. And if the market has had a bit of a rough quarter, people start to freak out. And this chart shows you exactly what that panic costs. It's real. People sell their investments, they run to cash, or they just stop their regular monthly contributions. The data is crystal clear. Investors who do this consistently underperform the ones who just stick with the plan by 3 to 5% a year on average. I mean, over a decade, that gap is absolutely life-changing. I really want you to burn this phrase into your brain. It completely reframes how you should think about a down market. When prices are lower, your consistent automatic contributions are just buying you more shares for the same amount of money. It's literally like your favorite investment just went on sale. That's the whole point of consistency. So tune out the noise and just stay the course. Now for trap number 4, this is a quiet one, a sneaky one that adds up incredibly fast. It's the silent drain from all those subscriptions you've completely forgotten about. And guess what? The end of a quarter, like right now, is a massive renewal period for apps, software, and memberships. I mean, seriously, just take a second and think about it. How many things are you subscribed to right now? The data shows that the average person is paying for somewhere between 4 and 6 subscriptions that they aren't even using. As you can see here, that could be almost half of what you're spending on subscriptions just vanishing. And those little $5, $10, $15 charges, they add up so fast. We're talking anywhere from $500 to maybe even $2,000 a year just gone for things you don't even use. The action item here is so easy. Just spend 15 minutes this week doing a subscription audit. It is without a doubt one of the easiest financial wins you can get. All right, let's talk about the trap that creates a mountain of self-inflicted stress every single spring. We all know tax day is coming on April 15th. The real trap at the end of March is feeling that anxiety build up while doing absolutely nothing to prepare for it.
And this timeline just perfectly lays out the urgency. When you rush at the last minute, you make mistakes, you miss deductions. But here is the most important part. Right now, today, you can still make an IRA contribution for last year. That opportunity, that window, it slams shut on April 15th. Don't let procrastination cost you a huge, valuable tax deduction. And that brings us to our final trap. And to be honest, this is the master trap. This is the one that allows all the others to happen. It's the simple act of skipping your quarterly financial review. You just stumble into the next 3 months totally blind to where you actually are with your money. A quarterly review doesn't have to be this big, scary, complicated thing. In fact, this is what financially successful people do. Just block out 30 minutes this weekend. That's it. And answer these 4 simple questions you see right here. Did my net worth go up? Did I hit my savings target? Is my investment mix still right? And did my debt go up or down? That's all you need. So here's the beautiful part. None of these traps are that complex. They're just small delays, little justifications we tell ourselves, but that also means that fixing them is simple. So here it is, your action list for this week based on everything we just talked about. Do these 6 things and I promise you, you will walk into Q2 feeling so much more in control and in a much stronger financial position. And I want to leave you with this one last thought. Just look at that list one more time. These are all small things you can do in the next few days. So ask yourself, which one of these, if I actually do it this week, is going to have the biggest positive ripple effect on my wealth 10 years down the road? Just pick one and start there.